We have another guest joining us.
Yeah, Ambareesh Baliga joins in, but we'll have to thank Bhanu as well for being with us. Thanks Bhanu, for all your thoughts. Ambareesh Baliga is with us on the trade setup. It looks like it'll be a good day. Ambareesh, good morning. How has the market reacted to the new RBI governor's first day, and because of the sentiment up move, how much do you think the market could move today?
In fact, this is what we were discussing on Monday, whether the markets will cheer Raghuram Rajan when he comes in. And that time also I had said, yes, I think there will be a rally, but the question is from which levels the rally will start. And expectedly the rally started from the lower levels. And I think today also we'll possibly have another 100 points. But for the market to really cross 5550, 5600, decisively, I think it would be quite difficult, because whatever said and done, I don't think the sentiment will change immediately. I think he can talk up the markets to a certain extent, but unless things change at the ground level, which I really don't see changing, at least in the immediate future, I don't see a sustained rally. So, my advice would still be the same. Those who have missed out on the earlier pullbacks, utilize this and get into cash to a certain extent.
So today, will you buy anything at all, Ambareesh?
Nothing really. I would really look at exiting to a certain extent, and especially banks. If we see a decent rally in banks, I think that's one space I would look at exiting. Because like I said, once it opens to the gap, you hardly have anything on the table for any upward move from those levels. So it doesn't really make sense getting into the markets today.
All right, Ambareesh, let's take a quick break. We'll come back and get more stock-specific ideas from you and other experts who will join us. Back in a minute.
Hi, welcome back to the show. We have about half an hour more and we'll get the pre-opening rates on the screen. All Asian markets are up in the green this morning, but the SGX Nifty is the best performing of the lot, up about 2%. But here are some stocks that you can watch out for this morning. Watch out for financial technologies. In Network 18 exclusive, sources say that the PMO has given a go-ahead for shifting MCX, NCDEX along with FMC and all other commodity exchanges from the Consumer Affairs Ministry to under the purview of the Finance Ministry. So that is an important update over there. Also, after SpiceJet, news reports indicate that Jet Airways has now increased its fares by a steep 25% with immediate effect. This hike comes on the back of a weaker rupee and the recent hike that we've seen in ATF prices.
Also, watch out for Axis Bank, as the Reserve Bank has withdrawn curbs on foreign equity investment in that bank as the foreign shareholding has gone below the trigger under the FDI policy. And then in a sentiment positive for Unitech, the promoter has released their pledges actually on 85 lakh shares, or 3.3% of the total shares outstanding in the dying minutes of trade yesterday. So Unitech should see some green tick today. All right, that's what are some of the stocks that are buzzing around in news. Banks, to be sure, as a category will be in the news, since they will be able to arrange some immediate liquidity from overseas markets. So watch out for banks as well. But Sudarshan Sukhani joins us to tell us what he will do with the index as well as several stocks. Sudarshan, good morning. Good to have you on the show. Well, the Nifty itself, excellent rally yesterday. Does it give you a sense that it's good to go for more?
Yeah, good morning. I've been upbeat and bullish on the market for 4 days now, so that sense continues. The dip that we saw was one day correction, rather a correction compressed into 1 day, and these things happen. So the view has been consistent, be a buyer. I hope people have listened. Even today, after a 100-point rally in the Nifty, there is the possibility of going long for those who have still not done so on any intraday dip, on intraday consolidations. Of course, a lot of the move has come, but it's not over. There is more upside in the Nifty for short-term traders, and they should take advantage of it.
Okay, hi Sudarshan, good morning. Since you are, in a positive frame of mind, let's start off with your buy calls. Banks will be on the top of that list today because of the fundamental news, but technically you like ICICI Bank?
That's right. I like ICICI Bank because it's been finding repeated support at 800, and that support should hold for the simple reason that the Nifty is no longer looking at going down but rather going up. So if that support holds, we can see a decent rally in most banks, but ICICI is probably more appropriately placed to take advantage of whatever happens now on the charts.
Well, this is not in your list, but I'm tempted to ask you about Axis as well.
Well, it's almost the same, except that because the sharp decline in Axis was, more as compared to ICICI Bank. On a relative basis, ICICI was a better choice for today. But it's a very minor difference between the two. You could go long anywhere.
Okay. And one of those stocks which have been more resilient, Bajaj, what are your levels in Bajaj Auto?
Oh, Bajaj Auto is now going through a correction, completing that correction and beginning its original up move. These are dips in an ongoing bull market for Bajaj Auto. The levels have come on the screen, but the view is that we've already seen strong moves here, and this should continue and go back all the way to the earlier heights of 2000. So there's a lot of steam here for people who are willing to carry positions. I just want to make a point that I said earlier also, yesterday, day before. This is not a market for intraday traders. Somebody trading intraday would have closed his or her position yesterday in the Nifty. But those who were willing to carry long positions are far better off thanks to that 100-point gap. There are markets where intraday trading is conducive and profitable. Sometimes only intraday is possible. This is a market where you have to take positions home.
You've liked REC in the past as well, Sudarshan. Today it's a good time to buy that stock?
I would think so. Even assuming there's a gap up, it doesn't matter. The REC and PFC are both bottoming out. There are clear and visible patterns available for bullish view. So REC is a buying opportunity, yes.
What about your sell calls now? You have a sell on Z Entertainment today.
That's right. One, of course, is the need to have a sell call because we want to have some balance and not go overboard. And the second is, unfortunately, Z is now doing exact opposite of what the market is doing. Z was an outperformer. That outperformance is over. A small rally is apparently a bear flag, and it's looking at lower levels. This time, I would not be surprised if the Nifty keeps on going up and Z keeps on going down. It's a short sell. It's also a balance against all the long calls that we may be having.
Oh, okay. Then let me get the other buy-in that Sonia didn't discuss, Muthoot.
Muthoot is a good stock for a swing trader. If you want to have a couple of days of trade, then it's in a narrow range and it's willing to go and break out today. For a position trader, it's just made a bullish head and shoulder. So that tells us that there is much more steam ahead because the targets for that are 135, even 140. So whether you want to buy it and keep it or just trade it for a couple of days, it's worth looking into.
Okay. Thanks, Sudarshan, for joining us with all those ideas. We'll, of course, touch base with you closer to trade opening. Ambareesh, not done with you yet. You tell us, will all the banks be, a sell-on rally for you, or are you picking up some nugget which has been sold considerably or which will benefit more from Rajan's announcements?
Especially the PSU banks would be a sell-on rally because irrespective of Rajan's announcement, we are still quite fearful as far as the NPAs are concerned. We don't see the credit route taking off. Because if you look from pure valuation angle, I think most of the banks and I think the market overall is looking extremely attractive. But then it would be worthwhile buying now if you see at least some green shoots by November, December, which I really don't see happening. So unless you really see, or foresee a turnaround in the near future, it does not make sense buying right now from a longer term perspective. So basically, my advice has been to investors and not really to traders. Because I think the last 2 months has been a great time for traders, those swing traders, but surely not for the investors. So, because of which I've been saying, utilize any of this up move to exit because I think the next 2 or 3 months there'll be a lot of pain and should really give you a lot of opportunities to buy most of these stocks at lower levels.
Okay, just a couple of more stocks, Ambareesh. In the last couple of days, we've seen some participation come in from BHEL. It's moved back all the way to, almost at 130 level. Would you touch that stock, or given the history, BHEL is a strong avoid, and also on L&T that's now sub 700 rupees?
If you give me a choice between BHEL and L&T, I think L&T is a much safer stock to buy and to have in the portfolio. BHEL, I think, is more of a trader's bet right now. The way it has cracked, surely you'll have some amount of bounce back on any sort of positive news. Right now we're talking of import substitution. because of which we are seeing this bounce back in BHEL. But do I see BHEL at 160, 170 over the next 4 to 6 months? I don't think so. I think the upside could be capped at about 140, 145.
All right, Ambareesh, take a break. We are back with more. But before we get into that break, listen to some trading ideas we got in Super 6.
BHEL has made a inverse head and shoulder pattern on the daily charts, and yesterday it has broken the neckline. So we may see further up move. The stock can test 133 in next 1 or 2 trading sessions. One can buy the stock at current levels with a stop loss of 124.
First call for the day will be L&T. If we see L&T, then yesterday's session stock has seen a good correction, but on lower side stock managed to close above its support of 680, and today again we have seen bounce back from these levels. We are expecting that stock will continue to trade with positive biasness, and we will see some more short covering in L&T. One can initiate long positions at current levels around 700 levels, keeping a target of 735, 740, and on lower side stop loss will be 680.
First stock that I have selected for the day is Bajaj Auto. After declining and remaining in a consolidation form since last few weeks, now the stock is giving some indication of upward momentum. It has also crossed above 100 and 200 days exponential moving average, indicating based on technical parameters that momentum is up, and hence a buy call for a target of 1975 with a stop loss of 1850.
Apollo Tyres was moving sideways in the range of 64 and 60 for last few days, but yesterday it has broken this range upside with higher volumes. So we may see further recovery. The stock can test 69 in next 1 or 2 trading sessions. One can buy it with a stop loss of 63.
Second call for the day will be a buy call on Idea. If we see Idea, then this stock is trading in a band of 145 and 175 for last couple of trading sessions. Currently, the stock is trading around its lower boundary, lower band of the range, around 150, 152. This is a good time where one can go long in Idea. We are expecting a short covering which may take again the stock towards 165 to 175 levels in next couple of trading sessions. So Idea is one counter in which risk reward is in favor of buyers, and at current levels long positions can be initiated, keeping a stop loss of 148.
Second stock that I have selected is Hindalco. Stock has been remaining in a sideways kind of trend, forming a base and having a neckline at around 113, which is acting as a stiff resistance for the stock. If it crosses 113 and sustains above that, there could be a sharp rally up to 120. Hence a buy call for a day target of 113 and a medium term target of 120 with a stop loss of 104.
Welcome back to the show. 10 more minutes and we'll get some pre-opening rates on the screen. Apart from all the, bonhomie post Raghuram Rajan speech, keep in mind that the pension bill has also been passed by the Lok Sabha. So that is something that the market was also waiting and watching for. So that will impact positively in terms of sentiment, at least for now. But let's talk about some stocks that are in the news this morning. Reema's here with us. She'll give us a list of that. Hi Reema, good morning.
Hi Sonia, very good morning. First, keep your eye on Apollo Hospitals, where reports suggest that its arm may get 600 crore from a KKR-led consortium. Gujarat State Petronet will also be in focus. They have hiked the CNG price in Gujarat by 3 rupees per kg effective today. Now the new price will stand at 66.3 rupees per kg. From Muthoot Finance, it's got the FIPB clearance for its white label ATM license. Remember, Muthoot Finance wants to set up 9,000 ATMs in India over a period of 3 years. So that's the forward plan that they have set out. Apollo Tyres, the stock which was up 5% in yesterday's trade in some fund action. Swiss Finance Corporation Mauritius has bought about 1% stake. That turns out to be about 55 lakh shares at a price of 64.9 yesterday. And in a few AGMs, which we will be watching out for, particularly if there are important comments, you've got Bharti Airtel, HPCL as well as Prestige Estates. With that, it's back to you.
All right. Thanks a lot for that, Reema. We have our guest panel to take us through the first hours of trade and, of course, some medium-term views as well. Amit Trivedi, co-founder of investworks.in is with us, as is Sangeeta Purushottam, the founder and managing partner of Cogito Advisors. Both of you, welcome. Sangeeta, just for starters, how long can this bonhomie generated by Rajan last, you think? You think it is enough to take the index beyond this, range of 5.2, 5.5 that it has been lingering? Or do you think it's going to remain in that range?
I think, we could overshoot that range a little bit, but it's a little difficult to imagine the market going too much beyond, say, 5.7, 5.8 levels, because, the valuations no longer are compelling. And I think while we are hearing a lot of positive steps happening across, both from the government as well as, the RBI, what we heard yesterday, the whole recovery is a process, and it's going to take time. And it isn't as if, it's a smooth road. There will be turbulence along the way. So I think while the direction is right, the path could be reasonably longer than what the current rally seems to suggest, and there are external headwinds which can come in from time to time. So I think we need to bear that in mind. I don't think we're still in the you can't define this market as being a secular market in a secular uptrend. There will be rallies and there will be corrective phases. So it's more like a base building phase that I see over the next year and a half.
All right, there's some comments coming in from Moody's this morning where they've downgraded 11 banks' subordinate debt and junior subordinate debt ratings, but they do mention that the bank's senior obligation ratings and their standalone baseline credit assessments are not affected, and the banks in question are Bank of Baroda, Bank of India, Canara Bank, IDBI Bank and Indian Overseas Bank. So you could see some amount of pressure, Syndicate Bank, Union Bank of India as well, and a couple of these private sector banks like Axis, HDFC Bank and ICICI Bank as well. So a downgrade has come in for 11 banks' sub-debt ratings in India on account of the increased risk that we're seeing in the system. Lata, will this have a huge impact?
No, it will have a marginal impact now because we are expecting people to go out and raise debt at such a time. Even if the subordinate debt rating has been downgraded, it will reflect in the cost at which you will raise the money. So, we have to get a banker to check out whether it nullifies the swap given by Rajan, by RBI in terms of their ability to swap that at 1 percentage point below market rates. But this is a bit of a negative now. If you're going out to raise money, would you do it on the day you got downgraded? Yeah. It will be a little tough. So I don't know. We'll have to check out with bankers how material the impact is. Often the market's already priced this in. Rating agencies are normally confirming what the market has already arrived at. So it perhaps will not matter in the price. That only a banker can tell us.
Okay, Amit Trivedi is also here with us to help us with the trade setup. Amit, hi, good morning. Today looks like it's going to start off on a good note, but would you advise a long position in the market at the start, and if yes, where would you place your stop loss?
Yeah, so if you look at the market internals that are shaping up, you have the VIX, which is still quite high at around 29%, and whenever there is such kind of expected volatility in the future, markets tend not to go up much from here on. So we don't expect markets to go much beyond 5600, 5650 levels. So we think for September month, everyone's waiting for that 18th of September where you have the QE or tapering part of it decision coming out. So we think market should broadly be in a range of around 5100 on the lower side and 5650 kind of on the maximum higher side kind of thing.
What about a strategy that you have on the bank nifty this morning, because that seems likely to open up on a positive footing at least before this news came in, but how would you approach it?
Yeah, so banks have generally been sold off quite a bit. So bank nifty is down from around some 13,000 odd levels in around May to around 9,000 levels or slightly lower than that. So we think bank nifty vols have also gone up to around 41%. So we think one can do a call ladder strategy in bank nifty, which is buy 9,000 calls, sell 9,500 and 10,000 calls. So your break even is any value above 9,120 odd levels. You start making money in the strategy, and even if market goes up mildly, the volatility will come down, and because you have sold more options than you have bought, you will net make some profit in this strategy.
Okay. Amit, Sangeeta, they're coming back to you for more advice on how to buy stocks in the near term and in the medium term. But Pragya is joining us with what some of the key brokerages have put out this morning in terms of their opinion on individual stocks. Pragya?
Good morning, Lata. Let's start with HDFC. Citi has actually a neutral rating on the stock, target price of 940. They believe that while HDFC has been benefiting and hurting because of the regulatory changes that we've seen, its asset business largely remains in good shape. The HDFC actually needs a reversal in terms of the RBI monetary policy to actually sustain their growth momentum going forward. However, the stock continues to remain at attractive valuations given the fall in the stock price. CLSA on Tata Motors, another big call coming in from CLSA on this one. It is their topic in the auto space. It's a relative call. They say that the relative attractiveness of Tata Motors within the auto sector has increased quite significantly given the weakening demand and the margin outlook scenario, which is going down for a lot of its peers, which is making Tata Motors attractive in the given scenario. Morgan Stanley and Maruti, they've cut their FY14 and FY15 EPS estimates by about 17% and 6% respectively. Also, consequently, they've cut their target price also on the stock. They believe their volume expectations on the company were never really high, but rupee weakness and the way it has moved has actually surprised them on the downside, which is why they've changed their financials. However, as far as the rating is concerned, they continue to remain overweight because the valuations continue to remain attractive. JP Morgan on Havels, they've actually an underweight on the stock. They've actually cut their target price quite substantially from 775 rupees to 520 rupees. Couple of reasons that they've highlighted is that earnings growth going forward for Havels is not going to be as much as what the company has traditionally delivered. They're factoring in almost 12% for FY13 to FY15 versus the 25-26% which the company has historically delivered, and this is mainly because of a demand moderation that now the consumer segment is starting to see, and a weak capex in the industrial segment. Also, the tapering off in the real estate completions, which is now going to impact companies negatively by FY14, is not going to bode well for the stock price. But that is back to you.
Okay, Pragya, thanks so much for that. We need to take a short break, but we'll be back just in time for the pre-opening rates. Stay with us.
MCX Stock Exchange, India's new